difficulty so the whole world can see, unedited, just how comical that whole thing is. Are we live? Are we live on the internet? Good morning. Good morning, everybody. So here's the thing. So every time we start this program and we're not running live, Howard has technical difficulties. Either his microphone's not working, or his headphones aren't working, or his computer's not working, or some combination of more than one of those three. Sometimes two, sometimes all three. And so we're just hoping that now we're live, we can't edit it out and we get to see with our own eyes how hilarious he is, because he's like a tech investor guy. You would think he would know how to use the internet. And there's my boy JC Peretz, my homie. What's up, buddy? How was that slash last night? Did you see
Dude,
slash?
it was unbelievable. Unbelievable. Fourth row, $31.
Love that.
$31.
Now, are you technically you're not in the Midwest. Technically, you're still in the East. Is that correct?
Midwest.
Well, I mean, it's Bethlehem, Pennsylvania. It's like, well, we're working here in Allentown.
No.
You know what I mean? Like it's got a little bit of that steel town, Bethlehem Steel, right?
That's where I was yesterday, Bethlehem Steel. Well, good for us that Bethlehem Steel went bankrupt because they decided to pay employees that hadn't worked there for decades instead of investing in research and development, which is great because now it's an arts and music center. Saw Jerry Seinfeld there a couple of weeks ago. Saw Slash last night with the blues band. Ooh, man, it was awesome.
That sounds fantastic. You took me there actually once before. We just went walking around there. It's beautiful and lovely, and it's clean living, and I love it. Michael Perek is here in the house. Michael,
are we live? Are we live?
We're live.
Hello, everybody.
We're live on the internet. Good morning.
Live
Michael.
on the internet?
We're live on the internet.
Amazing. The system of tubes. It's a system of tubes, and it's all connected to clouds.
It's a technical take
Clouds.
from our AI expert, Michael Perek.
A cloud somewhere.
It's a series of tubes. It's so classic. The kids don't remember that. I don't think the kids.
That's an oldie.
It's an oldie, but
you just Google it. Google it.
Google it.
Just YouTube it.
So we're waiting on Howard. We're going to talk about. It's a special edition of Panic with Friends. The market is panicking. The Nikkei is crashing. It's all, I'm blaming the hedge funds until otherwise noted for the carry trade. We're going to talk about that. We're going to talk about Google and the search engine thing. We're going to talk about are the markets still in an uptrend? We're going to talk about the VIX explosion of 2024. We're going to talk about all these things. We're going to talk about Howard while he's not here. What else do we got going on? That's most of it. Oh, we have a trends with my friends.
And carry trades. Carry trades.
We're going to talk about the carry trades. You want to get into that right now? Should we just go right into that and go completely?
No, that was in the end, and I think Howard was excited about it.
Howard's excited about it. It's now
let me just say that's remember Pee Wee Herman? They would have like the word of the day, and everybody would be like, "Oh!" And everybody would freak out. That's yen carry. Every time that you hear the words yen carry, you take a swig of tequila. That's not on the Perlman program.
Well, Pee Wee Herman, he would have had I feel like he would have been drinking on set, even though it was kind of a kid's show. I feel like there was a dark underbelly of that show that he was probably abusing substances.
Listen, I just want to talk about the people freaking out. Humans. Perlman, can we talk about humans? The volatility index just tripled overnight. We've never seen that ever. If you want to throw up that chart, we've never seen the volatility index triple overnight. We saw that yesterday. Historically speaking, when you get these volatility spikes in the market, these are great buying opportunities. Historically speaking, you could throw up that first chart there. Let me tell you something. I don't know what the market is going to do, which is par for the course. We never know what the market is going to do, but I know that people are panicking, and I know that a lot of these indexes close at all-time highs, just like 2 minutes ago. So let's put things in
I just
perspective.
want to give a
But-
shout out to Brent Donnelly, whose chart this is. He posted this chart, and there's Howie.
No, it's a great chart.
It's a great
I
chart.
just like the long gaps between these spiky things. We keep forgetting, that when it happens, it's extraordinary and it upsets everyone's days. But we forget that these are, for the longest time, as they say, decades go by and nothing happens. And then in minutes, decades happen.
What's up, Mr. Linson? Thank you for joining us.
But am I really joining if you can't hear me? Can anybody
We can hear you.
We can hear you.
Oh,
We
this
can
mic-
hear your sonorous tones.
I feel like Elvis Presley. Are you to the money? Two for the show. This thing has got, I don't know, this Shure mic has a lot of new tech, even though I must have broken my other one on my European travels. All right, sorry I'm late, boys. This is live.
We're talking about the psychology. We're talking about everybody freaking out. We're talking about the explosion. We just jumped right into that.
Well, I think history helps her, even though JC, Charlie Bilello had some great posts, but this chart just stands out just because I look at the world quite simply. And I've been telling this in my newsletter for years. If I were to be a hedge fund 2.0, and you guys chime in. If I were to really go out there and sell a strategy right now, my strategy would be Freck.com for 90% of the year, like tax loss harvesting, simple indexing. And then when the VIX gets above 20, put your rally cap on and go to work, right? Because that's when opportunity and alpha come to your advantage as a professional investor, meaning zigging while other people are zagging. So as I've written on my newsletter for over the years, when I was in my 30s and 20s and learning how to invest, I would be the guy selling into the first spike of fear, right? And that got tiring and boring by 1998 and 2000. And so if you're going to last in this game, you have to have a strategy that works. One strategy that works is just buy the dips, Vanguard investing, low cost, dollar cost averaging. When you have cash, put it to work. And when you get to 70 years old, maybe rethink your strategy and rebalance, right? My strategy is someone who loves the markets and loves talking about the markets and can get people like you guys regularly on the call, is to say, if I were to try and beat the market, I would try and be the market as often as possible. And then one of the 1 to 10 days a year where things align in my favor. And to me, it seems to be the easiest time is when the VIX is above 20. Because if you look historically, when the VIX spikes 1, 2, 3 years out, your returns are going to be higher. And so however I package that hedge fund, or however I run my own money based on that strategy, because that's my strategy, right now is the time to wake up and kind of look through your lists and get going and get with people that are smart and keep a level head. And that's kind of why I thought we should do it live. So I'm excited when I see the big 60. The only thing that spooked me yesterday was how the VIX got to 60, right? With indexes near or at all-time highs, with so much capital still to be put to work. How the hell does the VIX spike to 60? And then the media is covering it as just a yen story. First of all, I don't believe that. There's way more to the VIX being 60.
It's very simple, Howard. You want me to explain?
Mm-hmm.
It's very simple. It's just a domino effect. Think about the current market. Have you ever been to a strip club at lunch? Have you ever been? Right? This is
week,
like that.
This week?
I'm asking. Anytime.
I'm saying this week, no.
Go to a strip club at lunch and then go to one at 1 o'clock in the morning on a Saturday night. It's going to be two completely different situations, right? I mean, that's just what it is. You got the A squad, you got the B squad, the C squad. So
which do you prefer?
That's what's going on now in the market. You got the portfolio managers that make the big decisions. They're in the Hamptons. They're whatever. They're in Aspen. They're traveling. They're doing other things. The B squads are there to not screw things up. They're literally there just to watch over things. They're not making major decisions. So that thins out the market. Steve Straza, who works at All Star Charts, director of research, he used to work in these hedge funds in Greenwich, Connecticut, and he would call it the parking lot indicator, right? You know, that when you're low on the totem pole, you got to park far as shit from the office, and all the big PMs got the best parking spots. Well, when they're all gone, now the low man on the totem pole gets the better parking spot. That's what's happening in this market, right? You got the B squads on the desk. So you got all this lack of liquidity, if you will, in August, very, very normal. And then you get like kind of like a little mini heart attack over in Japan. That's one of the things that took place. Kamala Harris kind of trumping Trump, and some of these may have had something to do with it, right? There were a lot of different factors happening at once. One domino falls, a leveraged fund in Japan blows up. They need to sell a whole bunch of things. They sell things that other leveraged funds are in, they get liquidated, they need to sell all these things. And then meanwhile, it's low liquidity, you got the B squads on the desk. So all this happens at the same time really, really fast, hence that VIX spike to triple. That's what that was. That is forced liquidations taking place. It's not like this, like, oh my God, the economy and the recession and the this and the that. It's just positioning. That's what that was.
I think JC's right on the liquidity in the B squad. And then the other element, I mean, you know, it's as Howard said, it's not just the end trade. It's a number of other things all kind of happening. There is a perfect storm. And in the Mag 7, you had a bunch of fundamental news that was all kind of disconnected, but it all kind of happened at the same time. You had Nvidia say, "Oh, our best chips are going to be 3 to 6 months delayed," for the, you know, and that has major ripple effects on everything in tech. Up and down the tech stack that we've talked about. You've got Google getting slammed, the DOJ, the Justice Department drawing blood on one of the antitrust suits, and so that was an impact. Then and you had similar types of hiccups and tracebacks on a number of other tech stocks as well.
The market doesn't like, the stock market specifically does not like volatile moves in Forex and fixed income markets, period. Whether that's the yen, whether it's interest rates, a combination thereof. It's not about, oh, the market doesn't like higher rates, the market doesn't like lower rates. It's the rate of change of those changes in price in fixed income and Forex markets. Let's remember what dominates. Forex markets are 4 quadrillion in value, is something like that. A lot. The fixed income markets, you're looking at $130 trillion market. For perspective, the U.S. stock market is less than 50. The crypto market is 2, right? So the real markets are Forex markets and fixed income markets. That's what's driving things. And the stock market is getting knocked around when those things are having heart attacks.
Okay, so we're going to get in. Go ahead.
So Phil, one more thing. If we pull back up that chart, so my work said to buy yesterday, right? So I did. I added some indexes, take advantage of the tax loss harvesting that's going to happen now that everybody rotates and finds alternatives to put in. You know, for example, FREC does this automatically, but all the tax loss harvesting, you benefit over weeks like the next few weeks, right? Because that's how tax loss harvesting works. You know, the thing that the math is only the math. You don't want to be involved on the wrong side of the one. So what got me thinking yesterday, the only thing that got me a little bit edgy yesterday was just the market's in an uptrend. So is this more of just, JC, a flash crash, which means, you buy the VIX spike? Or
I mean, it wasn't even a
spike.
crash. I mean, the
well,
market's
the VIX,
really
I'm saying,
correct.
is the VIX,
you want to know something
that's my
interesting?
point. Did the VIX deserve a 60 for what we saw? And is the VIX broken?
It's a public marketplace. The VIX is a representation of the implied volatility of the S&P 500. So this is a derivative of an index, which is a basket of stocks. So you're talking multiple derivatives down the road of versus a Caterpillar, where it's just one individual stock. So now if you're looking at the VIX, like, you are looking at a very complicated, options formula that goes way out in very illiquid markets. So just understand the math here is way over your pay grade. Lindsay, myself, Pearl Dog, maybe Michael Perek, and maybe it's in his pay grade, but definitely not the rest of us, right? So let's keep that in mind. I'd rather look at what the individual stocks are doing. And what I found really, really interesting, you can see it here on the doc, is the lack of new lows. Mathematically speaking, in order to have a market correction, you could go to where my mouses. That's the chart that I'm referring to. This is the new lows list on the New York Stock Exchange. And mathematically, in order to have a correction or a bear market, a correction of any kind, the prices of stocks need to fall. Like, I don't care if you're a fundamental analyst or you're an economist or you look at the weather. It doesn't matter who you are. We'll all agree mathematically, stock prices need to go down in order for it to be a correction or bear market. So why don't we look at the amount of stocks that are actually going down? Nothing. You got no new 52-week lows, which makes sense because you got the most amount of new 52-week highs this entire bull market last month. So they're just really far from new 52-week lows. So fine, let's give them that. New 3-month lows, new 1-month lows, nothing. No spikes, nothing. And it might be no spikes yet. It might be we're not getting the new lows yet. Fine, but we're not seeing that yet. So that I think needs to be front and center. I'm surprised, to be honest, just how few stocks were making new lows despite the frickin' VIX tripling overnight.
That was
One
my
other
only point.
chart.
So JC, thanks for this. This is why we do this, mostly for me. So I appreciate all three of you showing up just for me, because I'm trying to understand this as a dumb person. And as a dumb person, I take as few data points as I can. Helene Meisler, price, nothing like price to change sentiment. Some of my own quotes, which are like, complacency is a bug. In hindsight, we know the complacency. Jensen was signing bras 3 weeks ago, like a rock star, like he was Drake. The AI was assumed it was going to be $100 trillion business a week ago. So none of that necessarily changes, but we had complacency, which is a human bug, right? We saw it in the meme coins, we saw it in the tokens. We didn't know when it would end. We didn't expect VIX 60, but volatility is here, and volatility is an amazing feature of this market. I don't consider volatility a bug. I consider it the perfect feature. It fucking cleanses. And so what was confusing to me yesterday is what you just summed up to me, JC, is like, I was excited when I woke up. I definitely didn't think it was the yen that would create a big 60. I thought I'd wake up to Iran news and a VIX at 30. And I had a game plan for that. And a game plan for that would have been a lot bigger down moves in, NVIDIA and the indexes in a whoosh. Instead, what we got was like and like you said, very few broken trends. No shoot up in all. So maybe this is just a flash in a quiet market, summer market, and there isn't that much signal in it, which is weird. That's all that I was pointing out.
I think
that's why I wanted to do a live show.
Lindsay, I think the signal is in the sentiment reset. Remember, newsletter writers were the most bullish they had been in 3 years.
Yeah, we talked about that.
You have the CTAs, the most bullish they've been in like 6 years. There was a lot of optimism. The volatility was at freaking 10 on the VIX. Like there was you talk about complacency. There was complacency. So just because you need a sentiment reset doesn't mean the bull market is over. The polls are going to start coming in now. We know the put call ratio spiked. We know the VIX spiked, obviously. Those things certainly corrected. My suspicion is as these sentiment polls start coming in the next few days, you're going to see massive corrections in their feelings as well, resetting the sentiment, setting the stage for the next leg higher of this bull market.
I have a comment.
What was next?
I have a comment about emotions and volatility, but I wanted to go back to Howard's question originally to you, JC, because you have this great chart. And Howard, you asked, are we still in an uptrend? Right. Mm-hmm. And so this beautiful all-star charts here chart that has a long-term, can we pull that one up? It's the one that I'm highlighting now on the document. And it basically just shows that we're still in an uptrend. It's a one moving average. It's a very simple chart. And I just want to get your read on this chart, JC.
Yeah, I mean, listen, this is one way to do it. Higher highs, higher lows, above a rising 200-day moving average. You have a majority of stocks where their 50-day moving average is above the 200-day moving average. You had the most amount of stocks on the New York Stock Exchange above their 200-day last month. You had the most amount of new 52-week highs on both the New York Stock Exchange and the NASDAQ last month. So, again, these are not things you see in bear markets. You don't see participation expanding. You don't see the new highs list getting longer in bear markets. You see the exact opposite. So, for me, the bull market is intact until we start to actually see evidence that prices of stocks are going down. And we might see it at the end of today. We might see it at the end of the week. I have no idea. That's the beauty of it. None of us actually know. But from experiencing markets for multiple decades now, studying markets going back 100 years, it's a market of stocks. I was that guy overthinking the VIX. I was that guy overthinking the S&P 500. I did that. I was that guy. And I think it's much more advantageous to take a more holistic approach at the market and understanding that sentiment needed an unwind. The majority of stocks are still in uptrends. We haven't seen breakdowns yet. Now, there's a lot of yet. These things might still happen. We just haven't seen it yet. We've just seen very constructive action, in my opinion, in terms of resetting sentiment to set the stage for another leg higher in the bull market. That's what
Michael.
I see so far.
So bottom line, no spit storm for bulls. Just to kind of balance out what we've been talking about. That's a very good chart.
Spit
and
storm?
Very good.
Spit storm? Is that like a hot
I'm trying to be PG-13.
Got it.
Shitstorm. Look at
You mean
that.
got it.
Michael's always going to be Goldman Sachs. So we're going to go to the fundamentals in a minute. But if you pull that chart up, JC's, thanks. All I was planning for in my work all weekend, and I'm not saying I was excited for it, I thought a VIX 60 would lead to an S&P 4600. That would have been a mindless whoosh to me. And that's what I was prepared for. When I saw S&P 5100, I was like, okay, I was confused. I bought some Goldman, I bought some indexes, I bought a little NVIDIA, but it wasn't like, I felt like all that work I had done, which is what you have to do. 9 times out of 10, nothing happens. But, it was a preparation weekend. And what I got was just, I was ready, aim, no fire because of what I saw. So we'll see. I mean, like you said, I think we're still in this uptrend. And, maybe we do see 4,600, 4,500.
I think you buy the leaders. And in markets like this, look at the one standing out. Yesterday, Rocket Mortgage making new 52-week highs. Look at Cinemark making new 52-week highs. That stands out. In a tape like yesterday, you got these stocks making new 52-week highs? Rocket Mortgage, I mean, come on.
Well, the thing
We
about
got that
Rocket
chart. I
Mortgage is
think
if
I
we're
put
going to
that
go
chart in the thing. Michael, what's
if
up?
we're-
I
was
just
gonna
point out
say- Go ahead.
since we brought up NVIDIA, technology, and VIX, fun fact, trivia fact, both NVIDIA and VIX were invented and introduced in 1993. So
Nice.
31 years, okay? And so you've got an enormous amount of technology built on NVIDIA, enormous amount of technology ETFs and traction around VIX.
And then one last thing on
the-
NVIDIA, Perlman. One last thing on NVIDIA. NVIDIA lost over $800 billion in market capitalization. Just for those keeping score at home, like 850, check my math, in a matter of like 4 weeks.
Mike,
I
since you were at Goldman for so long and understand a lot of the market stuff, what does the VIX mean to you? And what's your understanding of the tech behind it and why it's used by so many old farts like myself?
No, it's an attempt to quantify obviously emotions and fear, and it's evolved pretty nicely over the years. The original, as JC mentioned, there was a lot of math involved in from 89 to 93. A bunch of real deep geeks had created that, and then it got built. And it is as good an approximation that one can find to model fear, and then all of the trading that goes around it and the strategies that go around it that JC talks about eloquently. So I think it's a great proxy. I think we made a big deal about the tripling in one day. But if you look, and we had all these wonderful charts that you talked about where these spikes are. But in general, if I had to look at fear across the last 30 or 40 years, you and I on email talked about 87. There were a number of reports that this is reminiscent. Yesterday, it was reminiscent of the 87 crash. I was there at the 87 crash. This was no 87 crash. So
There were a lot more new lows on the 87 crash.
There's and thank you, JC. And so I in terms of the VIX, yesterday my sense was it and you guys are, and JC much more of an expert than I, but it was in the 50s and 60s. That's on the low end of the when perfect storms hit, whether it's yen carry trade or whatever it is in previous cycles. 60s is at the low end. Then we've seen 70s and 80s are the peak. 80s are the peak, where we've got major league stuff.
For
So
now.
for now, that's right. And
Okay.
and these are all interesting gauges to keep in mind. And as Howard, you said, you know we need, if you're investors, you need to, these are the times you live for as investors, whether you're professional or not. And hopefully you have liquidity, hopefully you have a strategy, and you're legging into this. But even if you're not, we had Barry Ritholtz here on here a few weeks ago, and he said, look, you could have bought these things on the high and just forgotten about it, and you'd still have made a lot of money across all of these markets and against other asset classes. So that's the other thing to keep in mind.
Can
These
I
are
say
pretty
two things?
dramatic things.
Can I say two things
Please.
in terms of, and we'll close out on the VIX thing because this is a lot, but there's two things. First of all, what Michael was saying in terms of the height of volatility and all that stuff is perfectly all right. I live in a world where I'm expecting the VIX to spike to 120, 130 one day. And if you think that's off the table, I think you're crazy. So as investors, we need to know that that is on the table. And we will be talking about it one day. Be like, I told y'all it was going to happen one day. Watch. You're going to see a triple digit VIX, number one. Number two, just as a rule of thumb, divide the VIX by 16. And that's what the market is pricing in for a daily move. So in other words, if the VIX is at 32, look for the S&P 500 to move 2%, all things being equal in that day. So just some kind of just like a regular rule of thumb. VIX at 16, expect 1% daily moves. That's just kind of like a good way to think about it that's been very helpful over the years.
I just had one
And I'll
comment
just
I wanted to make
go ahead.
about the VIX and about the emotionality in the market. And I think it is thin. To JC's point, it's the summer, and the junior traders are parking in the good parking spots. But I just want to talk about emotional reactivity right now as another element. We are living in a hyper emotional time. There's a lot of anger out there. There's a lot of frustration. There's a lot of emotional reactivity. People are very quick to very strong reflex to become outraged by things, to be angry about stuff, to be upset. We have depression and anxiety levels making all-time highs within the mental health research literature. And that reactivity, Howard's taking medication, although he's been medicated for, that's like a horse tranquilizer. I think he's taken over there. He's been taking forever. And the thing is that reactivity, to some degree, going back to Howard's point about just buying when the VIX goes crazy, that reactivity is like a put underneath the market. It's like an insurance policy. Because if we're getting investors reacting so violently, so quickly to the littlest jittery things, then we get our capitulation very, very quickly. We get our VIX spike very, very quickly. We get our expectation of heightened volatility very, very quickly. So I kind of love this situation. I kind of love this like whoosh. If you have cash on the side and you have a long-term plan, you come in just like Howard described in the first 5 minutes of this broadcast. And that emotional reactivity that is a sociocultural thing is not going anywhere. I mean, we're heading into the very contentious election season, and it's just not going anywhere. Like it's just a jittery public.
I think what I learned from yesterday, it did the work. I made the calls, had a game plan. I think what I learned yesterday is what JC said. We are definitely going to see a VIX over 100. Like, when the COVID VIX hit 80, I started panic with friends. And I've told people, go listen to the first 10 shows. I don't know if I had Michael on in the first 10 shows or JC or Phil, but I had Jim O'Shaughnessy, Fred Wilson, some great options traders. And we did a good job. Not because we're smart, because we did what you're supposed to do when there's fear and panic and whooshes. We said, hey, if you don't get long now, you'll never get long. Doesn't mean we judge you. It just means if you're ever going to buy a stock, March 2020 was the time to buy a stock. Okay. What got me excited about this VIX move that has already faded, I mean, it's a 27 hat tip Koifin, which we're investors in, which I've been using regularly for the last, when the markets are volatile, I use very regularly, which easily displays all this stuff. What surprised me about yesterday is there was news that there's fundamental news, Google losing an antitrust suit, what Michael will talk about. We've got AI pushing back shipments. You've got Elon Musk suing OpenAI, and you're seeing all the documents that come out about it. There is a lot at stake. And then you got the election, which seems like if you're Elon Musk, it says the world civil war is at stake, right? Like everybody with a microphone is screaming. So to see the lack of the whoosh was the only thing that surprised me. So again, I hope I did nothing and we go straight up from here. But that was something that I learned, which makes me think that JC's right. If you can get to VIX 60 on what we just saw, you're going to see a VIX 100. But the other thing that is appreciated is all weekend. I don't know if it's true because anything I read as news, I rarely watch news. Is Iran is basically telling you we're at World War III. They're basically coming clean and saying, this proxy stuff is fun for a while, but we're not getting enough headlines. We want to come direct and take out Israel. Now, they've been saying that off and on for forever, but now we're banging the drum. So that made sense to me, not in a good way, but that like, hey man, like, what are they going to do? Now, so far, nothing, but they've changed the DEFCON. And again, I don't understand war politics here, but by chirping as loudly as they are that they were attacked because a terrorist was killed on their soil. That was a new thing, right? At least in terms of throwing that into the mix of trading in the VIX, and the market seems to have brushed that off completely. So,
All right, let's switch gears. Let's go to Michael. Let's take a break from this. We're going to come back and talk about the carry trade, and we're going to talk about Japan. But let's take a break from that because there was other big news yesterday around Google. Nobody paid any attention to it, but the Department of Justice versus Google. Michael, why don't you give us an update on what's going on there?
Sure. I've been writing about this tech wave, AI tech wave. We have seen more antitrust and regulatory actions against all the major technology companies that is relatively unprecedented versus prior cycles over the last 30 years. No Mag 7 is immune from this. And so there are a lot of actions going on. You can track them. And similar types of things are going on in Europe as well against the US tech. Yesterday, we had one of the cases where a hit landed on Google. It's interesting what it landed on. The government basically ruled, the judge ruled in this case, that Google's default arrangements to be the default search on Apple's and other smartphones was monopolistic and thus should be illegal under antitrust laws that go back, by the way, to the 19th century. The antitrust laws in this country had their germination in the whole oil era in the 19th century, and legally they've just been adapting to the various tech cycles. So what happened yesterday is that the judge ruled against this default behavior on the search box being a default on Apple, for which Apple makes $20 billion a year. And then other OEM companies, smartphone companies like Samsung, et cetera, make a few $1 billion a year for being the default on these devices. What's interesting, the glass half full for Google was that the judge did not rule against the search side. That even though Google has a 90% plus, 95% plus market globally on search, that was not impinged on. Now, this is a legal case. It'll be appealed. It'll go on for years, et cetera. What it means for AI and technology going forward are two things. I wrote three things I wrote about yesterday. Number one, it is talking to the power of default settings and how arrangements that try and manage default behavior by billions of users that they don't have to think about which search engine is this there, and the parent company gets paid for that. That is now questioned. Why is that important? Because we're in a new era of technology where AI is going to change search, AI is going to change so many applications, and as these applications mature, there will be a need for default behavior on various platforms, operating systems, and so on. And there'll be a lot of things to do on that basis. And these companies are smart; they'll figure out ways to do this. But they've been put on notice on this on default. Number two, data. The judge also made comments on how Google had monopolized the data in its search engines. This is important even more for AI because data is the biggest input into the models being better as AI scales. And I've talked a lot about that. And so it's an even bigger deal for AI. So that's another piece. And number three is that it ripples these things, even though Google as a stock didn't go up or down that much, market saying, okay, this will wind itself through the courts over the years. But more importantly, I think it does change behavior of small, medium, large companies over the next few years because this is now a precedent, and so they have to work around it. And so we have to watch for that. As investors and analysts, we have to think through what these kinds of precedents mean. And by the way, there are other potential shoes to drop, both on the Google case and other similar cases against Microsoft, against Amazon, against Meta, and certainly against Apple. So now that this precedent has been set, they will also have ripple effects on other cases that are in the pipeline that will be going through over the next couple of years. And so we need to be mindful of that. And yes, those will be, as and when that happens, those will be air pockets on these stocks. So we need to be just aware of them and not be over surprised by them.
Does this change our
Yeah, I mean,
fundamental case for for holding Google? I'm long Google. I've been long for a long time. Does it change? Should I sell it now, or is this something that's just going to be like a slow bleed?
I don't think it changes things for Google, and they have so many businesses. As I said, this did not touch the search side. There are other cases on the search side as well. We'll see. No, and it doesn't change things dramatically, particularly because these things can be appealed. That takes years, and then there's all kinds of other countersuits and so on that can go on. The other wild card legal thing I'll drop into the bucket is the Supreme Court's Chevron decision, which basically allowed companies, not just in tech but across the space, to push back on administrative execution of Congress's laws, and that in itself is a whole new array of ways to make lawyers very rich. So no, this is not a knee-jerk sell Google thing at all. If anything, Google will tweak their behavior in terms of getting similar deals done in a different way with the Apples and others around AI search and other things. Yes, they will come up with ways to include competition. There are so many ways to execute through this, and these rulings are going to be relatively porous in that way. Would be my view currently.
Howie?
Throw up the chart.
Yeah, Paul Tishar, I deferred to Mike fundamentally on this. Malik had some good posts. I'm long Google. It's part of my degenerate economy. It's part of, I'm living on YouTube TV these days. I don't know if that makes up for my search. I never searched that much on Google directly, but I sure as hell spent a lot of time on YouTube TV, and I don't know how this lot. Again, I think, like Mike says, this definitely changes how investors should think about startups, and I can't figure that part out yet. Would I go back a search company anymore or an AI company based on this ruling? No. I still feel like these companies have such lockdown that I'd be a dumb allocation of my capital with what I know to all of a sudden feel like be energized to go take on Google in any way. And like Mike says, they're a diversified conglomerate like YouTube. Like if you break them up, it might be better for Google. We talked about this on the show before. It's like there's unlocked value.
Bingo.
Probably if the government forced Google and Amazon and Facebook to break up, so probably the market would have to go higher because now you have better founders getting trained on more businesses, not better CEOs trained on better businesses, and you go around the FTC. Everybody's going around the FTC everywhere. Microsoft basically bought OpenAI by just funding it. Like these lawyers have figured out ways around the government. As Owen says,
And
the
just to your
government's like
point,
the
Howard,
guy walking into a bar for last call. Like that's what a regulator is. They walk in and the party's already happened and everybody's drunk and the regulator comes in and says, "Hey, what's the party? Like, let me grab a drink."
Yeah, but I'll bring it back to practicality. Perlman, you'll appreciate this. This is what Google looks like. If you scroll down, you can see what the NASDAQ 100 looks like. It looks exactly the same, right? Take that entire base, goes right to the 161.8% extension. Leonardo Fibonacci wins again, right to that level. Google did it, Q's did it, and the S&P 500 did it too. Look at the next chart. So, all of these things you guys are talking about for Google make perfect sense. At the end of the day, it's trading with the market. And it's not even that big of a weighting. It's 4% of the S&P 500. I guess that's pretty big. 4% of the S&P 500, 5% of the NASDAQ 100. So, I mean, it's not like enormous. It's a good size, but it's trading with the market.
Yeah.
Beautiful.
I'm with
Okay,
you.
let's
I
go on.
said
Let's
this
talk
when
about
Google. Sorry,
Go
I said
ahead.
this when Google broke out, and I added more. Like below that breakout point, I have to
And now it's retesting that breakout point,
fundamental.
by the way,
I mean,
Howard.
listen, it's not like I'm thrilled about this sell-off. Like I'm not married to any stock.
Yeah.
Looks like an
because I
uptrend to
see
me.
bad business.
I'll
Yeah.
just say one
But-
other thing, since Howard, you talked about lawyers coming around, different strategies, even when the FTC and the government comes in. We've now had three major acqui-hires in the AI space. Microsoft bought Inflection to diversify and do a backup plan against their partnership with OpenAI for $4 billion. Basically, and they did it in a structure that if they had just bought it as an M&A thing, would have been contested on a regulatory basis. And then Amazon did the same thing with Adept, which is another AI unicorn. They bought basically the key people and made the institutional investors essentially whole. And now you just saw Google do a pretty nice deal on character.ai, where they really went after the dozen or so key AI engineers. Most importantly, the two co-founders were literally especially one of them, Noam, was the lead author of the Google 2017 Attention is All You Need AI paper, which kicked off the generative AI thing that we're all living through. It literally defined the transformer, which is the T in GPT that OpenAI is OpenAI's model is all based around. So Google now got those engineers back. In fact, all of these guys who used to work at Google left, and now Google bought some of the best AI talent back through a $2.5 billion acquisition this week. So there was some good news on that front for them too.
Yeah, it's also bad for AI in many ways because everybody's selling because they know that it's going to be tough to build a business that meets that valuation. So the founders aren't dumb.
Correct. Yes and no. Correct. Sorry, go ahead, Howard.
Well, I was going to say, I thought Elon bought Character AI, but again, there's so much.
No, it was reported the day before the Google transaction finalized that Elon was going to buy it. It was not confirmed. Everyone, all the big tech companies have looked at this, and Meta was there, and I'm sure everybody else looked at it. Google was the one that pulled the trigger officially. So it's pretty much done. And the last thing I'll just say to your point, Howard, yes, because we are at the high capex phase of the AI industry, a lot of the cool startups do find that it's better for them to sell to the big companies. But in 2 to 3 years, when all of the processes move to the edge on these devices and so on, that won't be as much of an imperative. So there's a timing issue also I just want to highlight. Thank you.
Yeah, and so just wrap up with this, guys, on this, and we can move to the next subject, is that the OpenAI guys are leaving too. A lot of the OpenAI guys. One's going to Anthropic.
That was another shoe that dropped last night.
So you can't keep track of the moving parts. So I think the guy who wrote Attention, the Google guy who wrote Attention, is everything. I mean,
Attention is all you need.
Yeah, in 2006, 2007.
It was in that paper was the seminal AI paper. That was just 2017. And that was also 3 months prior to that. I'm just pointing this out because it just points to where we've come from. NVIDIA Jensen, he literally said at a conference 2 weeks before the Google paper, he said, AI software is going to eat software that is eating the world. He built on the thing that Mark Andreessen talked about in 2011. And that is what we're in the beginning of, that AI software is eating all traditional software for the last 70 years. It started with the Google attention paper in 2017. It's now 7 years in, and the AI industry has barely gotten started. We're just in a year and a half, a little over a year and a half after ChatGPT was introduced in November. So early days.
And I think as attention, Phil, as attention things, let me get this around
Paper.
trends. As the attention, that paper I wrote basically in 2007 without knowing anything about how to write a paper. When I sat with Phil and Fred Wilson and said, Twitter, if you want to talk about attention, the best attention markets in the world from a media perspective are sports and finance. Why? We're seeing it right now. Whether people like watching this or not at scale, the markets are open 24/7. When Twitter
There's
started,
a game every day, 5 days a week, 8 hours a day.
No, that's when we started. When we started StockTwits, there was Take Me to the Phasmobile. In 2024, we have VIX, stablecoins, Coifin, StockTwits, Reddit, Twitter. The ultimate blunder in the world of attention, and Elon's trying to fix this. I don't think he can because of its politics and what he really wants to do with it, is the ultimate attention media markets are sports and finance. Why? Because sports has money bet on it, and sports are global and happen all day, every day, and the markets are open 24/7, 365. So if you're going to build products, build them for those two markets in an AI world. Doesn't mean you have to. I'm just saying if you have expertise in this space, this AI trend is phenomenal for every angle. And so attention comes in many forms, right? And in many levels of scale. So I don't want to compete with Google on the technologies part of this.
You were a
AI
decade ahead on attention, ahead of the
But now
AI
it's about
attention.
creativity. So now it's about don't compete with StockTwits, don't compete with Google. Who you can compete with is being the next great voice, the next Taylor Swift, the next
Mr. Beast.
The Haktua girl. So we're entering this true, there was this 5-year thing where Andreessen and everybody was creator economy. They were investing hundreds and hundreds of millions of dollars in platforms for the creator economy. We don't hear about those funds that are all zeros. The actual creator economy is the person, right? And the actual creator economy is simple email platforms so far. I mean, I guess it's Twitter, but you can get shadow banned. But the actual creator platforms are live, like we're doing right now, versus taped. And they're actually email, knowing how you connect with your fans. We didn't have to create all these fancy products. But here we are in the true AI is the true unlock for the creator economy, where marginal costs of like souping up content that we make right now are closing zero, right? The problem is distribution costs because of the pipes and because we let these Mag 7 stocks control our pipes. Unfortunately, we're getting unlimited AI creativity possibilities with like pipe problems, which is unfortunate, but that's kind of the new problem. All right, got that off my chest.
I just want to say really quickly before we move on to carry trade, I'm incredibly grateful to the three of you because I learn so much every time we do this program. And for the audience who's watching, especially the younger crew, there's over 100 years of market experience on this in this little group right now. And so when you hear us talk about the VIX so calmly, I mean, we're doing Panic with Friends special today. But really, that's an ironic title because none of us are panicking. It's all just very chill. And the thing is that these things happen over and over again in markets. They are predictable patterns that occur repeatedly. There's our boy Riley talking about the youngins. And so I'm just really grateful to be able to go through this, chew through this stuff with people who have been there before. And we're going to talk a little bit about risk at the end, near the end of this program, but we have to move on because we still have a lot to cover. Riley, we're going to get to trends with no friends in a minute, but we have to talk about somebody on the panel. Tell me about the carry trade. Like I'm a 5-year-old and tell me why it's all the hedge funds' fault.
They short the yen. They take that money. They buy risk assets, stocks, and other things, crypto, whatever. So when
The
shit hits
Aussie.
the yeah, well, exactly. Risk assets, right? So to a variety of degrees, depending on the risk asset, depending on what year it is. They short the yen, they take that cash, they buy risk assets. So when shit's hitting the fan and the yen is ripping, they got to cover their yen trade, and therefore they have to sell those risk assets that they bought so that they can use that cash to buy back their yen. That's
is
gonna
this-
be,
Explain
that's
their
the domino I was
complacency,
talking about before.
No, but this all goes to the human bug, the complacency bug. Now, granted, timing when this would happen was not, but these so-called professionals, why are they doing that trade, JC? Because of data, because of history, because of the trend?
It's free money. So if
It's
your
not free
neighbor,
money, as we
if
learned
the hedge
yesterday.
fund down the block has extra fuel to make money because they keep selling this yen and they keep making money, you're like, motherfucker, if we would have done that, we would have made so much money, right? So it's human. Hedge fund managers are no different than the other humans. It's all the FOMO. It's
That's
all
what
the
I'm
same
saying.
thing. If so-and-so LLC Capital over there is doing that and they keep doing that and we're not, that's going to piss me off because they're making more money. And if we were doing the same thing, we'd be making, so it just piles on. It gets to the point where it's too much. That blows up every cycle that happens, right? We've seen it before. We'll see it again.
But
Is this systemic risk? Is this systemic risk to the global financial blah, blah, blah?
There's
Well,
always systemic
obviously, the VIX
risk.
tripled overnight. So yes.
Okay.
Right?
I
Crypto's
would say
not,
this,
for
though.
example. Crypto doesn't
I would
matter.
say-
Crypto's not systemic.
But let me say this.
The thing about carry.
Assume,
Go ahead.
oh, sorry, Mike. Assume the market's rigged and assume people are going to be complacent and you'll be a much better investor, right? And if you assume those two things, you'll be as cynical as us about two things, that CNBC is more an opposite effect than a positive effect. If CNBC was doing their job well, knowing that the market is rigged and that humans are humans are complacent because of trends and because of what keeping up with the Joneses and what the neighbors are doing, fast money would be recorded once every few months when the VIX is where it is. Meaning,
but these
fast
TV
money
networks
would
are not
be
there to
today.
give people what they need to hear.
I understand. This goes to why YouTube and creativity is going to happen finally. We're finally at that point, whether you like us or somebody else, where people can deliver the message that if CNBC 2.0 existed, yeah, it wouldn't get many clicks because you got to run a business according to the size of the opportunity. But you would be running markets in turmoil when the VIX is at 12 and no one would like hearing it. And you would be running fast money when the VIX is 50 because this is when you make money. Much easier than trying to do it every day trading by yelling ideas for an hour on TV. Now, granted, that is not what sells advertising, JC. But in this new world, this is another domino.
Why you don't sell advertising? Advertising is a shitty business.
I understand, but they're stuck doing that, and this is another leg. This is
because
another.
But what you just said, right? Because you're stuck on advertising, you have to whore yourselves out to the sponsors and do what you know is not the best thing for your viewers because you're not there to make the viewers happy. You're there to make the sponsors happy, right? That's
Correct.
the conflict of interest.
Not
to pick on any one network. That's just the way the business.
But there's another domino.
But
This
that's
is why things, when they die slowly, and then, oh, look what happened. Meaning,
Go ahead, Michael.
There's another domino. Go ahead, Mike.
I just want to make a couple of points building on what JC and Howard are talking. In terms of hedge funds, look, hedge funds have been around for decades. Markets have been around for decades, and they're very large. We talked about trillions of dollars on forex and fixed income, etc. All those charts that we had, where you had huge periods of stability and then these spikes, the carry trades that we talk about, as we all know on this call, that's the way hedge funds work. They have these trends on and they're these bets, and they're basically assuming that all this stuff will work in a range. Once in a while, something happens. In this case, the Bank of Japan said, oh, we're going to raise rates for a bunch of political and economic reasons, 25 basis points. And that was abnormal. So that starts to unwind the trades for the first time. And what I'm saying is, so you can say they were complacent, but I would say, to use a favorite word of Paul Mann over there, cognitive misers. We just, are cognitive misers. We have to simplify the world on heuristics, say these trades are working in this way for a long time. And then, yes, oftentimes we will forget the additional heuristics we should be watching. We should be watching the top 3 carry trades in every geographical market constantly. There should be a newsletter, I'm sure there is, that says these are the top 3 carry trades. And
That's
if you're an
interesting.
investment shop, you should be watching, or later on soon we'll have AIs that will watch, the 20-25 carry trades on the planet every day. And Sunday night they give
Such
you
a good
a
idea.
thing. This is
You
what
have
it
it in
is.
by the way, you
know,
have it in crypto too, where they're shorting the futures and buying the underlying. You see the carry.
So my
you see that in
question-
crypto.
So am I?
We can innovate out of this with
awesome.
technology.
We'll come up with that list, Phil. Am I a cognitive miser then to be only looking at the VIX?
You're a lot of
Once every
things,
2
Howard. You're a lot of things.
You're totally a cognitive miser, and I'll tell you why. And this goes back
I
to
just want to know
since
if I
I've
should
known
fix
you.
that.
This goes back to since I've known you, going back, almost 20 years. And that is that you are a curator. And you read, you find the best, you find the smartest people. You find guys like Michael, you find guys like JC, now guys like Riley, and guys like Fred, all the way back when I met you. And you read the smartest guys, and then you use what they say to your advantage. So that's that. I used to think, hey, he's not even that bright.
Yeah.
But then I learned that, wow, he's a curator.
process
That's
is
the
good,
smart thing.
Before we started doing this podcast, I would get random phone calls.
He's a
from
cognitive
Wednesday, and
king.
he'd be like, "Hey, what are you seeing? What are you seeing out there?
Look,
Yeah,
I do
all right,
that.
see you
But
later."
why- so
All the time.
Being a, but
All
in
the
that sense,
time.
I'm asking: is being a cognitive miser something you should aspire to? Because obviously it's worked for hedge funds, and you're saying it works for me. So it's not a negative term.
I know. I would say
It's
to
the-
the way Phil described it, you're actually you're a curator. I would say another word for that is a cognitive king. You're looking at all the signals. You are questioning. That's what your newsletter is. All your discussions.
Like a Tiger King, but better.
You are looking at all this, talking about it, throwing it out there, talking to people, getting their viewpoints, etc. And so you're not as narrow a funnel on
I'm
it.
not offended. I'm trying to figure out, we've talked about this on StockTwits, and we see the same in skiing. You go skiing, you're a beginner and an intermediate. You go rent skis that could affect your life and the brakes and the bindings, and you go, are you a beginner, intermediate, or expert? It always bugged me. Same thing with financial questions. Are you a beginner, an intermediate, or expert? What the fuck does that mean? How can we get better if we don't truly understand people's risk profile? And so I've always wanted to solve that. Is the faster we can help people understand who they are and how they think will make them a better investor. So I think terms like cognitive miser are way better terms, or eternally pessimistic or the ultimate optimist than beginner, intermediate, or expert. So we have a long way to go around that, Phil.
Can we get into the face ripper that is Solana, please?
Let's talk about, let's do that. Let's talk about, everybody's got a good idea. There's always a bull market somewhere. We're going to lead with Riley, Trends with No Friends segment. Riley, what do you got for us on the Trends with No Friends?
I had a pretty good one this week. It's going to be Clearwater Analytics, which is a $5 billion financial SaaS provider based out of Boise, Idaho. There's our
CWAN.
CWAN, only 284 followers on StockTwits, so nobody really cares about it, which is fantastic. On July 31st, it reported record-setting Q2 earnings with annualized revenue growing 22% year over year. But I think the real kicker is its gross revenue retention rate was 99% for the second consecutive quarter. So not only is it growing revenue, but its customers are sticking. The stock gapped up 20% following earnings and has just traded in this high and tight range ever since. Relatively unfazed by the recent sell-off on Friday and yesterday. So if the stock is above, we'll call it 23.55, which is that high of its earnings day, it looks like the path of least resistance is higher. And we can see on that weekly chart, which is the one just below there, it's working on a nice IPO-based breakout.
This is a mortgage situation, folks. Rocket Mortgage also hitting new 52-week highs. So there's a bigger theme here. Nice catch there, Riley.
How are we in a recession, JC, if home builders and Rocket Mortgage, I love how everybody, the conversation switched to recession
I ever tell
yesterday.
Howard, the day I ever tell you my opinion on the economy, just punch me in the face as hard as you can. Just my life is over. Like I can, first of all, recessions are a choice for anybody who matters to the stock market, right? Like anybody putting money, right? Like recessions are a choice for a lot of people. And by the time the recession hits, the bear market is over and we're probably on the way up already. So like that economy stuff is so silly.
Okay, so Rocket Mortgage is your idea.
Rocket Mortgage is beautiful. Let me give you a
beautiful.
couple.
Go ahead. What do you got?
No one has this. Wasn't on my list. COE, which is part of my degenerate portfolio, on proves again that when the VIX spikes, it's good for certain companies, right? And what's it good for? CBOE would be one that's long been in my DGM portfolio. They
new all-time highs yesterday,
CBOE. Yeah, new all-time highs yesterday. So next up would be, I hate seeing this, guys. It makes me sad, Philip Morris. Okay, when was the last time someone mentioned Philip Morris to you? Okay, we trust the government to what? Do a few things for us, right? They're breaking up razor companies for us, thank God, in order to approve the Schwab TD Ameritrade merger, which just fucked over millions of people yesterday, just in one day again. Now they're busy with breaking up Google. Meanwhile, Philip Morris, I listened to a Joe Wiesenthal podcast about Zyn, their breakout hit product. It's just a new packaging of death and evil. You're going to hear, listen, it's a lot of competition. I don't know what the barriers to entry, but the way Philip Morris is selling and setting up companies and the way startups are setting up companies to poison us again is fantastic. Is not fantastic. Is creepy. Philip Morris all-time highs.
And more. It's Philip Morris International is what Howard is talking about.
Okay.
PM.
And what's the difference? One PM, but what's the difference?
You have Altria, which is MO, right? Because they split
those. Their food
remember?
Company. Okay.
No. These are the both Philip Morris, but you have Philip Morris International, which is the one you're talking about. PM.
Okay.
You also
PM.
have Altria Group, which is MO. That's the
which
OG
is also
Philip
performing
Morris.
well, by the way.
Not as good as the one Howard's talking about.
Right.
Howard's
right. So I only noticed PM. It made me sad. Joe Wiesenthal had a great odd lots with the founder of Go Listen. Shout out to Joe. Does the hard grunt work like us, boring conversations that try and help people understand things. But he had, of all things, I was scanning about Zyn, and I have a son who, pisses me off. But it's like the vape and the Zyn, and the more work I do, the more evil I see. And we got a problem on that one. But if you want to make money off a problem, I guess Philip Morris. Not for me, but I have to say that pisses me off. But like that is a trend with too many friends that I don't see how it ends. So those are my two. Keep going.
I got one, and we're gonna end it here. Somehow we fit almost everything in here to an hour, slightly over an hour. Riley, thank you for joining us. It's just incredible how week after week you have another one that nobody's paying attention to and nobody's ever heard of. It's crazy where you're coming up with these. Here's mine. If you are watching this and you did not have a positive view going into the VIX spike, if you were panicking, if you were twisting, if maybe you still are, I mean, the NASDAQ still, the QQQ is still down 10+%, even with the bounce today. If you're like, man, I'm getting killed, I'm getting run over here, here's what I want you to do. I want you to go to your Google Calendar, or whatever kind of Outlook, and I want you to set an appointment for yourself in January, near the beginning of January, after, maybe the first 5 days of January. And I want you to put in there, redo my long-term investing plan. You don't want to do it right now. If you're twisting, it's a worse time for you to go, because now you go sell everything, market comes back, and you're like, fuck, how do I get back in? It's happened. That happens all the time. That's a tale as old as time. So what you want to do is you want to wait till a strong time of year, the market comes back, January, you set it in your Google, redo my plan. Then you want to go and you want to think about a long-term plan. You want to get with people who've done this before. Maybe we'll do a special, maybe I'll put it in my calendar, and we'll do how to invest for the long term. We'll have a little segment on that one that we never talk about. With me, I basically do 70 to 75% ETFs, 25 to 30% cash. And then, the market goes down 10%. I'm only down 5-6%. It doesn't bother. I can sleep at night. But anyway, then you do it then. You don't do it now. Now it's too late. 3 months ago when we were making all-time highs, I was telling people in the show to go do that, to go redo your portfolio for the long term. People don't listen because they're riding high. All the really risky assets are working. They're crushing it. But now you're feeling it. So now set in your Google Calendar or your Outlook, January 10th, let's say. It's a strong time of year. Maybe we're at all-time highs. And you go in and you say, hey, now I'm going to rejig how I do my portfolio for the long term, whether it's low-cost ETFs and some cash, or however or maybe it's getting a financial advisor who's really good and really helpful to setting that long-term course. Do it then. Don't do it now while you're twisting in the wind.
Yeah, the other thing that we like, have Mike here and young Riley is the same thing. You got to surround yourself with like different mindsets. You can't all be the same person. It's like this goes to that me trying to solve that risk profile thing. That you have a sleep score, you have you can track you got a watch on that tracks your the Whoop and the Apple Watch, and no one takes the time to really understand how they think. And now you have a true measure. You don't measure how you're thinking so much when the VIX is 12, because you're going to be stuck. You're going to have cognitive bias. You're going to be doing the things that seem comfortable. You measure your risk profile when the VIX is elevated, and you're going to make mistakes. Trust me. The first 6 or 7 times, it just did the opposite. But that gets boring if you're really interested in trying to get better at this game of investing. It's not going away. Investing is going to become this way, whether you like it or not. Robinhood ain't going away. Schwab ain't going away. Crypto ain't going away. People come and go, but these things are not leaving. And then you had sports. You had Philip Morris breaking out to all-time highs with tobacco. You've got anxiety medicines. You got the iPhone. So the faster you kind of get that risk score in your brain, like what you can live with, the better. And no one's figured that out. No one's figured that out yet, but that is something that someone needs to start, working on. All right, boys. Live show. I think live is probably better than tape, so we'll have to think that through. And Michael, thanks for making time.
Thank you, everybody. It's awesome.
All right.
Adios, guys.